Yeah, and I did. I backed into a few stocks that I had very, very low priced buy limit orders in, which I know we're going to get to later in the show, so I don't want to say too much there. I just think big picture, the thing for our viewers to remember is the difference between a regular investor versus a professional. And everybody probably remembers back in the day when Maria Bartiromo was hosting, and she would like start every interview with, "So, are you putting money to work here? Are you putting money to work here? Are you putting?" She never got a no, because professionals who run long-only, fully invested funds have to buy. They have to be doing something all the time. You're never going to hear a professional say, "No, I'm not putting money to work here," if that's their mandate, the type of fund that they run. However, most of our viewers are not in that boat. They don't have to do something just because the market does something. And I've actually been listening to Steve Weiss on the show all year talking about his hesitance to just be throwing money into the market because it opened at 9:30. He's been right to be somewhat hands-off. I've been trying to communicate that message as well. It's not that we should be worried and never buy stocks. It's that we're not forced to. We're not compelled to. Almost everything is in a downtrend right now. I don't see that stopping. I'm glad some of the big tech stocks bounced today. I guess that's kind of cool. They shouldn't go down 50 days in a row. But really, this is a bear market. Statistically, I know it's not yet for the S&P, but trust me, it is in real life. And that should tell you that you have three choices here. A, you could do a lot more than you normally would. I don't think most people are served by that. B, you could do a lot less. Okay, not bad. And C, what the majority of Americans are probably doing, you could do nothing. You could do nothing. So that's my message. I think it's important. You should stick to the strategy that you're running right now, not go in search of a new one, not look at what worked yesterday in the market and try to emulate it. Sit tight. Let's see how this plays out. There's a long way to go between what happened this morning and where things could be headed.
Weiss, for a long time, you've been saying that you don't need to be in the market, as Josh had said, that you like cash right now. I mean, at what point do you say it may be time to deploy some capital? I know that you don't feel the need to, you don't feel the pressure to, but when you see a turnaround like this, do you think maybe we've reached some sort of fair value point for technology?
Well, I don't really think it's about fair value, and I agree with everything Josh said, and would point out that this is a lot like Pavlov's dog. Market goes down and, people think they have to buy. Professional managers think they have to buy. Keep in mind that most professional asset managers are not the asset allocators, to put a point on what Josh was saying. They get allocated cash for their specific strategy, which is to invest that cash into stocks. So that's what they do. So the bell rings, market's down, and you invest. Look, geopolitical risk has, for the most part, been buying opportunities, but we haven't seen geopolitical risk like this. This is not some skirmish in the Middle East between two of the countries there that don't like each other for the last 3,000 years. This is Russia making a major move into Ukraine that I believe will be followed up by China making a major move on Taiwan. So while there's temptation to buy when it's down, I don't think the market's done going down. And for all the people that criticize and say, hey, you can't pick bottoms, you can't pick tops, well, one thing I can pick, and that's to focus on risk management and protect my downside. I'd rather miss 10% to the upside versus current levels, which I think, by the way, as I said, will go lower, than catch the next 10% down, because that takes so much more to replace and provide you with so much angst. So look, I'm still bearish in the market. I still believe we're in a bear market in a very unusual time. That's the perfect storm for equities, with a rising rate cycle, with the Fed unable and unwilling to do anything to cushion the downside. The Fed put no longer exists. It hasn't existed for a long time. So I'm content just staying in lots of cash, maybe picking things here and there, but I'd rather be hedged and not lose more money, because the pain of losing money, as I've said before, is much greater to me in terms of sensation than the victory in making money.